Hey there, Singaporean investors. Today's Straits Times Index edged higher to about 4,300, with sentiment buoyed by regional risk-on flows and banks firming into quarter end, while traders watch global tariff headlines and data prints for cues on earnings resilience. The STI hovered near recent highs around 4,300, extending a late September upswing as financials provided support and cyclicals were mixed on macro headlines. Recent prints put the STI's late September close near 4,300, with momentum helped by bank strength and broader follow-through from regional indices. SUNTC REIT's manager named David Matheson, ESR Group's CIO, as chairman and non-executive director, succeeding Chu Gek Kim after 11 years at the helm. Units closed $1.28, down 1.5% before the announcement. Matheson brings deep APAC real assets experience from ESR, Starwood Capital Europe Advisors, and Oxford Properties, which could steer capital recycling and balance sheet discipline in a higher-for-longer rate setting. With ESR reshaping its leadership after its 2025 privatization, the appointment signals alignment with large-scale, logistics-led asset management expertise that may influence SUNTC's portfolio strategy and partnerships over time. FLCT completed the divestment of 357 Collins Street, a 25-story freehold office in Melbourne CBD, at a $192.1 million, $161.4 million. Units were flat at 295s before the news. Management framed the exit as a strategic retreat from a challenged Melbourne CBD office market with elevated vacancies, refocusing on logistics and industrial exposure. The sale modestly exceeded the latest independent valuation and fits a portfolio tilt that could support income quality and reduce office-specific risk as the cycle normalizes. Raffles Medical named Wu Yang as CFO effective Wednesday, with remit across corporate finance, tax, treasury, and investor relations. The counter finished $30.98, flat before the announcement. Wu previously held CFO and IR roles at Paragon REIT and senior finance roles at Capital Land Investment International, bringing REIT capital markets and institutional IR depth that could aid capital allocation and funding cost optimization. The leadership move comes as healthcare operators balance capacity utilization, medical tourism flows, and cost discipline into FY25 planning. Metro appointed Erwin Woisang Uy as CEO of its retail arm effective Wednesday, elevating from COO to lead strategy and operations. Shares closed flat at $52 before the news. The transition follows the February 2024 resignation of the prior CEO and aims to sustain execution across the group's retail footprint amid evolving consumer traffic and omni-channel trends. A steady hand from within may help speed merchandising and store productivity initiatives while aligning with property owner synergies. LHN said its co-living brand, Kaliwu, lodged a preliminary prospectus for an SGX mainboard listing, with a portfolio of 25 Singapore properties. 11 owned, 10 leased, 4 managed. LHN closed at started 93, down 0.5% before the news. Proceeds are intended for expansion and asset enhancement in existing and new markets, signaling a push to scale amid strong rental demand for flexible living. A listing could crystallize value for co-living assets and provide balance sheet flexibility for accelerated growth. Thakral completed the divestment of the 9-story Yotsubashi Nakano building in Osaka's prime Yotsubashi Tsuji district, unlocking about $6.4 million in cash and booking a one-off attributable profit of around $2 million. Shares rose 0.6% to $61. The asset was fully occupied as of H1 2025, and the group retains exposure via 5 office and 1 hotel property in Osaka, maintaining a footprint while realizing gains. Recycling proceeds in a still active Japan market allows selective reinvestment and balance sheet optionality. Today's SGX tape shows leadership shifts, portfolio recycling, and listing plans. Classic late-cycle positioning as managers seek quality income and cost control while pruning riskier buckets like CBD offices. The key takeaway: governance and capital allocation matter more when rates stay elevated. Watch who's tightening portfolios, reducing funding friction, and aligning with secular demand like logistics and co-living. For positioning, keep diversified exposure, stress test, cash flows against refinancing, and favor operators with credible execution histories and transparent IR practices. That's the scoop for the SGX today. Want real-time takes and early heads-ups up to a week before they hit the feed? The premium is $3 a month. Think of it as a daily edge from this desk to the inbox. Like, share, and drop thoughts on today's moves. Every comment gets read.